For many people, the American dream can be summarized by being able to buy your own home. In fact, home ownership is the single largest predictor of what your overall net worth is going to be. The net worth of your average homeowner is over $250,000, while that of a renter is only about $6,000. But there are roadblocks standing between you and that dream. You typically need a good credit score, a good income, and a large down payment for the bank to even consider you for a loan. But thankfully, for a lot of people, there is a better way. What if I told you that there was a nationwide program that could help the majority of people buy a home with marginal credit at obscenely low interest rates? And the best part is you don't need a single dime for a down payment. That's right, no down payment required. If that sounds too good to be true, then stay tuned because home ownership has never been easier. And as always, if you find this video useful, consider subscribing for more money-making tips. Alright, so let's get right into it. There are a few government-backed loan programs out there, and most people have heard of most of them, like the FHA loan program or even the VA loan program if you're in the military. But there are other programs out there that don't get near the amount of attention they deserve. I'm talking about the USDA loan from the Department of Agriculture. By definition, the USDA home loan is designed for borrowers of low to moderate income in more rural areas. Now, before you get scared and click off this video thinking that rural means you have to buy some farmhouse out in the middle of nowhere, that's not what this program is all about. Now, sure, it does cover those farmhouses, but the USDA definition of what rural is extremely generous and often includes homes right in the center of towns with populations in the multiple tens of thousands or in the suburbs of major metropolis cities. We'll talk more about what this rural aspect means in just a moment. The USDA loan is a 100% no money down loan program, and this is quite probably the biggest driver of its recent popularity. Most low down payment programs require mortgage insurance. The USDA loan program doesn't have mortgage insurance per se, but it does have what's called a guarantee fee. This fee manifests itself in two different forms. There's an upfront fee that is due immediately when you purchase the home, and this fee can often be rolled into the loan amount so you don't have to actually come out of pocket for it. And the second fee is a yearly fee that is paid out in monthly as part of your regular mortgage payment. Even though there are two fees, the fees themselves are rather small, as the USDA loan has the lowest overall fee structure out of any of the government-backed loan programs, which is another reason that this program is so popular. The USDA loan is a normal 30-year fixed-rate, fully amortized loan. And the USDA doesn't have a set minimum credit score for the program. Instead, it is left up to the individual lender. Now, most lenders have a minimum score of roughly 620 or 640, and you can often get approved with lower credit scores, but your interest rates won't be quite as generous. Now, generally speaking, when you're buying a house, the higher your credit score, the lower your interest rates are going to be. And while this is still true with the USDA loan, this particular loan, your marginal credit score doesn't impact your interest rates nearly as much as some other loan programs out there. This is because since the USDA is a government-backed loan, so when it comes to interest rates, they're based on government-backed bonds. Since these loans are less risky for the lender due to the government's guarantee, they tend to be able to offer significantly better interest rates. And these interest rates are currently hovering in the mid to low 2% range and have previously dipped all the way down into the 1% range for exceptional borrowers. But as always, your rate will be dependent on your circumstances. USDA loans have income limits, but these income limits are pretty generous and are defined as anyone earning 115% or less of the average income for your particular geographic area. So for example, I'm a single guy living in Raleigh, North Carolina, so I could earn up to about $110,000 per year and still qualify under the moderate income category. The other main aspect of being approved for a USDA loan is that the home must be in a designated rural or suburban location, but the official website makes this process super simple. Links below. Just type in the address of the house and it will pull up a map that clearly shows you if the house qualifies or not. So in my area of Raleigh, North Carolina, you can see that Raleigh itself is off limits, but many of the surrounding towns, the suburbs, are not. Places such as Clayton, Wendell, and Zebulon each have multiple tens of thousands of people in those cities and fully qualify. And if you look at the Knightdale area, there are locations that qualify that are only about 10-minute drive to the downtown city center area of Raleigh itself. So as you can see, their definition of rural is pretty generous if you're only 10 minutes away from the city center. So even if you live in a larger city, chances are a home relatively close by still qualifies. This fact, combined with the relatively low income and credit requirements and zero down payment, make this a phenomenal deal for a lot of people. Now, as always, before you run out and buy a house, always check Google for any state-sponsored first-time homebuyer programs that are offered in your state. Many states will actually help you with down payment assistance or pay closing costs, etc., if you qualify for their programs, potentially saving you thousands of dollars. If you enjoyed this video, consider subscribing, and as always, I'll see you all again next time. Thanks.